Setting up a stock market can help an emerging economy to grow, but if they fail to take off, they then undermine trust in the financial system, and that dents the country's reputation. So what makes new stock markets successful in the long run? Research by Matthijs van Dijk of Rotterdam School of Management, Erasmus University, shows that a solid banking sector plus strong savings and a successful first 5 years contribute to the success of new stock markets.
Especially for developing countries, a stock market could help grow their economy. And there are still 49 countries around the world that do not have a stock market yet. So the question that we're interested in is, should these countries also open a stock market? And if so, how should they do it? Under what conditions would it work out? Our results show two important factors that can predict the success of these newly established stock markets. First, the size of the banking sector at the time of establishment. This suggests that for a stock market to thrive, there needs to be a healthy, well-functioning banking sector in place. The second is the development of national savings. This is an indication that without savings that people can invest in the stock market is also not going to thrive. In addition, we performed a so-called necessary condition analysis.
And with this method, you can find those factors that are critical for the outcome. They must be there. And in the case of the research of this group, it shows that you need to have early success in order to be successful on the stock market in the future.
And we found that stock markets that had a too low number of listings or a too low trading activity in the first 5 years failed to succeed in the long run.
So you need to have early success on two indicators, and if you are successful there, it means that you have a possibility of becoming successful in the long term. But it doesn't guarantee your success in the future. If those two conditions are absent, it means that you have guaranteed failure.
For example, Panama started out with a very small number of listings and very little trading, and they never came to fruition as a stock market. For countries that do not have a stock market yet, our study offers some clear advice. Make sure that your banking sector is well developed, stimulate national savings, and if you start a stock market, do it right from the start. Make sure you attract a sufficiently high number of companies from the beginning and also generate a sufficiently high trading activity early on. Otherwise, your stock market will fail to thrive in the long run.